What's good, guys? It's your boy CS. In this video, by popular demand, we are going to look at how some of yous have been unfortunately liquidated, or on the other hand, how your portfolio is very, very down bad and what to do next. Well, the very first thing is within markets, and especially when you've taken a loss or you got liquidated, is assess your behavior. It starts within. You have to critique your own self and become the best version of yourself. What did you do when you purchased? Did you FOMO in? Did you get too greedy? Did you follow the herd? Did you chase the trade? What did you actually do? That's the first step, because we always the baseline is always to have a revisionist perspective. As they say, hindsight is a beautiful thing. If you can look back on your actions, write it down, have a journal, whatever it might be, you can then assess your own behavior. Because there's so many different things that you could have done wrong, which you wouldn't have done if you were thinking like a rational human being at that contemporary time. For instance, there's other things such as, over trading. Did you get that burning, tingling sensation where the market's going to leave, the train's about to leave, I need to get in ASAP. I need to get in ASAP because it's about to blow. And then you get in and then the market comes back down. How many times does that happen to you? Do you understand where I'm going with this? And so if you've taken a loss or you have got liquidated, the very first thing you need to do is go back and look at those trades that you did, the spot investment in the wallets, whatever it might be. Look where you got in and why you got in. The question is, why did you get in there? Was it because somebody told you so? Was it because you got, like I said, any of those motivating factors, which are actually negative factors, that ultimately ushered you to go and do something? You need to go and figure that out yourself. And that's where self-reflection comes in. And it's the most key point, actually, with all these points that I've raised for you here. Once you've assessed yourself and really spend some time doing that, you can then look at the present. So look, we've looked at the past in hindsight. This is what's happened. Now, where am I? Have I lost all my funds? Have I got spare funds? Is leverage even right for me? Should I even be doing this? Do I even know what I'm doing by trading? And I always say, with experience, you can then become a better trader on leverage. But of course, unless I gave you paid tuition, one-to-one consulting, there's a lot of things that you guys don't know. And so it leads on to another point that I've made later on, which is about education and educating yourselves. But right now, where are you? Have you got spare funds? What is the best play here for you? If you're completely liquidated and you don't get paid now till payday, well, you're kind of sidelined, you're out of the game, because unfortunately, as per the hindsight point, the previous point, you got too greedy. And, if we go and look at some things here, let's look at Bitcoin, right? Imagine you were buying here and you're like, oh my God, it's going to go straight to 70K. And then you got liquidated or you've just got pushed back down. And so many times this happens to people. Like, people will get in here, they'll get in here, they'll see a green candle, and they're just getting constantly smashed out of the water, out of the market. And so, when you get into these candles or these trades, you have to have a reason why you're doing it, and it has to be full conviction from yourself. So if you're not doing that, you've not thoroughly assessed the past as to your previous behavior. And so looking at where you're at right now, you're not going to know what to do. And you need to know what to do. That's the most key point. You need to know what position you're actually going to be in. Is leverage right for you or is it not? And within that bracket comes a risk management plan. Do you actually have a risk management plan? I don't share my risk management plan because I'd only give that out on a paid basis. I'll be honest with you. My risk management plan is back tested. I have used it numerous times and it works for me. I know what I'm doing. I've scrutinized it and it works for me. Right? In order to make a plan, a risk management plan, you have to spend time to make one. Like a good couple of days to weeks, back testing it. and seeing whether that risk management plan works for you. If this is something you want to do personally with me, I would charge a fee for. And again, all my stuff is normally free, but this risk management plan is something key, and it's an arsenal that you should have under your belt ultimately. Next comes the point of where you're at right now, which is, yeah, I've got this spare change. You know what I'm going to do? I'm going to make it all back. The market's going to go up, whether it likes it or not. No, don't have that mentality. That's revenge trading. You're not thinking with rationale now. Logically, there is no logic on your side at the moment, unfortunately. You have to think better than that and cool down. You're letting anger and emotions dictate your trades. That's not where you want to be. And exactly links onto the next point, like who actually cares for you in this market? Because the guys manipulating it, the market makers, whoever you want to call them, the Illuminati, the investment banks, angel investors, all these guys, whatever, top dogs you want to call them, conglomerates, corporations, whatever. I don't really give a shit. But these guys don't give a fuck about you, right? And within that is actually causing you to have probably a lack of sleep. Do you work a full-time job, for instance, and you're doing this on the side? Are you a full-time student, part-time job? Do you have a spouse, a partner? Do you have kids? All these are massive factors that you're dealing with in your day-to-day life, and then you're trying to trade on the side as well. But you're rushing trades because you're so eager to make money. Don't be so eager to make money. Okay, let me rephrase that. Be eager to make money, but don't be eager to rush in to make money fast. That's a better phrase, actually. And the best things that you can do is educate yourself. Like, how much time do you get in a day to yourself? Can you spare an hour watching a YouTube video or educating yourself on technical analysis or fundamental analysis or some type of analysis, right? Because markets work on analysis. There is a simple strategy, which, Warren Buffett does say, and it applies more to stocks than anything, which is buy low, sell high. It's probably the most simple strategy, but where is low and where is high? You don't know because you have no technical analysis. And that's where you guys need to learn if you don't have simple technical analysis under your belt. And another key rule, which kind of links into this, which is buy dirty red candles. Because when everyone is fearful, that is usually the best opportunity. And I endorse this on my channel, not financial advice, that I myself exemplify this behavior. This is what I do. Again, nothing is financial advice on my channel. This is just what I am doing and what I'm looking out for if I'm setting up a chart pattern, for instance. Okay, we're still in the present. So what do you need to do now? You've taken a hit, you've taken a liquidation, you've lost whatever. What can you do? Go educate yourself. Go watch my key video on psychology of a trader. You know what? If I get a number of reactions or a number of people wanting a part 2, I might make a part 2 for it. But part 1, as a synopsis, is such a fantastic video. Even I go back and watch it to hear my own voice. And I'm only messing. To hear the lessons within that, right? Because, sometimes you can get so drifted into the world of markets and like into the charts, right? I'm like, oh my God, there's this spider line, there's this Fibonacci placement, or there's this indicator, there's this rising wedge, there's this falling wedge, there's this RSI, there's this, right? You get so worked up and so much effort goes into everything like that, that you actually forget about 101, that actually, this is what I need to do. This is my psychology. This is what I backtested, a risk management strategy. And so now we're leading on to the future. What are you going to do with your funds? And look, if you don't have technical analysis under your belt, just having technical analysis, just brief technical analysis, can make you so much money in this market. Like, it's crazy amount of money. But also you need to have a risk management plan as well and how to get out, etc. But if you can't do that, you don't have the time, then spot buying on an exchange or on a wallet, in my opinion, not financial advice, spot is the best option. 95% of people should be buying in spot. Just because I give my own thesis, trade patterns and setups, and what I'm going to do on leverage doesn't necessarily mean you should be doing that as well. And also, I'm okay losing, whether it's a couple of $100, $1,000, or $10,000 on a single trade with max leverage. I'm okay with that. You might not be okay with that. And you've got to remember, within psychology of a trader, I always teach, be okay with losing whatever you're going to put in. If $100 is a lot of money to you, then use $20. If $1,000 is a lot to you, then use maybe $75, $100. You've got to reassess your position. And the final point I'll put here is, once you've been beaten to your knees, and again, it's all about experience. Sometimes you have to be punished in market. Sometimes you have to get liquidated. Sometimes you have to have your portfolio be beat down so much that eventually you need to take those risks. Some risks are worth taking. But as I say, I've just put 90%. It's probably more than that. A lot of you aren't at that stage yet where you've not been punished enough to the stage where actually, I don't actually have a plan here. Once I've made money, what do I do money? Oh yeah, I want to reinvest it. No, you buffoon. Take your time. Just because you're in a trade and you've made money, and it's great. I'm happy that you guys are making money on trades. Also put stop losses to entry so you never lose money. Like when you got into Brett, for instance, my stop losses were above my entry, so I never ever got to have any kind of loss, right? I only had a profit, and that's where you need to be. You need to set stop losses at intervals where they are supposedly supposed to go to protect you in your financial management. And this is again why I keep saying about risk management. But yeah, unless you've got liquidated, and I know this is now the kind of where I'm talking to you guys who have been liquidated. Trust me, I've been there. I've been trading for over 10 years now. I understand liquidations can be really, really heartbreaking. You might have borrowed money from a family member, a friend, from the bank. I know it can be very, very hard, and you think that life is against you. But trust me, there'll be a brighter day. I know it doesn't seem like that right now. But if you have got liquidated, know that it's an experience. Sometimes you have to get punished in order to have these experiences. And don't be afraid to get back into the market again. You have to take L's in life. And I always say that. Take L's in order to take the big dub. Nobody, no successful businessman, sportsman, actor has ever just gone on straight W's. Like they've never taken straight W's without taking massive, massive L's before getting there. You can't. You can never grow without that. And to those that have a portfolio that's down in spot in their wallets. So for instance, Brett might have been at like 0.16, so 1.6 billion market cap, right? And now we're down at like 900 million. In my opinion, I'd be buying more because spot's a very safe option. I personally think Brett, this is not financial advice, will go way over 20 billion. I think it's going to be a parabolic meme that will go to 50 billion, maybe even to 100 billion, right? Like it's going to just blow and melt faces. And so when you think your portfolio is down, actually take it as a blessing. And that's what I endorse again. Whenever you see red days, take it as a blessing. Like, yes, I've got a day to buy some Brett or whatever it is, Casper, right? I've got a day to buy it. And so don't look at your portfolio and thinking, oh, I'm the only one in this position. Trust me, 99% of people in crypto right now are down bad, are very much down bad in their spot wallets. But on the contrary, it's actually good because it will one day go up. When that day will come forth, we don't know. But again, we do predict that we're in a bull run and everything will start flying soon. So don't be dismayed. Don't be displeased. In actuality, take it as a blessing. And if you have spare funds, if I was in this position, I would be buying and DCAing more, which means dollar cost averaging. So this is more for the beginners that don't use leverage, that are within my channel. Definitely use that option rather than anything else. Okay, I hope that's helped. If you guys have any, questions on how to bounce back or where you're at, or you actually just want to blow some steam and let it out in the group chat, don't worry. And other people that actually laugh at you when you get liquidated, they're losers, man. They're absolute losers. They'll never make any good money in their life. These losers are like parasites. Never, ever, ever, and I mean ever, don't ever be put off entering another long leverage position or a short position just because somebody laughed at you because you got liquidated. They're too much of a pussy that they'll probably only make a 10x in this bull run because they're not willing to use leverage. Leverage is a dangerous thing to use, but it's a powerful thing to use if you know how to use it. And trust me, you'll be making so much more bank than other people that, yeah, you might get, let's say you had $1,000, right? And you did $50 per account on not max leverage, but, you know, quite decent amount of leverage. You would have, in theory, you'd have 20 goes. You'd have 20 chances on buying red candles of making money on long leverages. And trust me, I've made just with one single leverage, you guys have seen it, like turned 3 figures into like five figures currently on one of my small accounts, right? And then 6 figures and 7 figures, right? You can just do it with a couple $100. You just need to get a great entry and sit on it. Don't sell, just leave it, hold it. That's what I personally do, and watch your money stack. You only need one leverage trade to make not just everything back, but so much more back. And I hope that is something you take away from this video, which is really positive and enlightening, that it only takes one trade, remember. It takes one. Look at Crash. Look at Kson. Some of their ETH trades, right? And this is no shade, because I've been liquidated as well on some of my accounts. They've been liquidated on some of the, I think their ETH positions or whatever it might be. I don't know if it was big time. But look at them. These guys have taken L's in order to take a big W, bro. Like Casper. Their Casper trades are absolutely flying. Their Brett trades are absolutely flying. Like, you can't deny greatness. If you get one leverage trade on a great entry and you wait and you're patient, my brother, my sister, you are going to fly. You're going to make so much bank. And this is the secret of leverage trading, which is waiting for that super low day, which has already gone, one of them, on Monday. And now you wait again if there is one. There will be another downside. There'll always be downside. It just depends when that downside is. We don't know where it can come to. Could it come down here? If it is, maybe that's a good area to DCA in on leverage. We don't know. Anyway, guys, I hope that was informative, and I will catch you in the next one.